The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender at MLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Good morning and welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettlelar, along with Accunet Mortgage Managing Owner and Senior Vice President Jerry Serkatich in this morning for Brian and David Wickert. And as always, if you have a question or a comment or you want to contribute and add to the program, you can reach us talk or text on the Accunet Mortgage talk and text line throughout the Midwest at 414-799-1620. Jerry, good to see you. Good morning and welcome.
Yes, Steve, good to see you as well. Great to be back. It's been a while, and so looking forward to spending the next hour with you and all our listeners. Got a lot to talk about, as always, and we're going to start, as we normally do, with the economy. A little update on the economy and economic factors that affected mortgage rates this week.
Well, we had a big jobs number that came out on Friday of this past week.
Indeed, always probably the most anticipated report of the month. We had the jobs report on Friday. We're going to touch on that. We also had kind of a quiet week other than that. The counterparts to our Federal Reserve have been in the news, the global central bankers. They were relatively quiet, so it was really more the economic data here at home that influenced our rates. Some positive, some negative. Again, we'll touch on that and how it impacted rates in just a moment. I'm hoping then we can get to these stories. I found a couple of really interesting articles, one written by the president and CEO of the Mortgage Bankers Association, David Stevens. This 4 financing steps that will open the door to home ownership. Interesting take, and president and CEO of the Mortgage Bankers Association, so thought it'd be worth sharing his thoughts in these 4 steps that he refers to. We've got busting the mortgage down payment myth. This another article I found in a publication. This one was written by Lawrence Yun, who is the chief economist for the National Association of Realtors. And Steve, here he talks about how still there's way too many who have mistaken beliefs about just how much money is needed to put down in order to buy a home. And so I've got some highlights from that, hopefully dispel some of those myths or mistaken beliefs. So we talk just briefly about home equity loans. That's been in the news quite a bit. There's a lot of folks that have either home equity loans that are trying to maybe consolidate those into their mortgage. There are others who are thinking about obtaining a home equity loan. So we'll talk about home equity loans versus home equity lines and those differences. And lots more if time permits. So, and finally the rate roundup. We'll cover that. We'll give everybody a sense for where rates ended up at the bottom of the hour. But first, let's then, with the time we have before our first break, touch on the economic news. And so, inflation data was front and center. And Steve, as you know, we talk about a lot. Inflation, or at least higher inflation, is an enemy of lower mortgage rates. And the Fed's target level for inflation for some time now has been 2%, an annual rate of 2%. Well, the release of a report this week, the PCE, Personal Consumption Index, or Price Index, an inflation indicator actually favored by the Fed, revealed that inflation remains well below this level. In June, actually, that level was just 1.5% higher than a year ago, same annual rate as in May. And so in this case, low inflation or lower inflation was good for rates, and pricing on mortgage rates improved a bit as a result. On the other, there was one more report in this, again, before we get to the employment data, but this is also a real highly anticipated report each month, covers the services sector, which represents more than 75% of jobs in the U.S., and slower expected growth in this sector actually caused mortgage rates to dip just a bit as well. And I should say rates, but pricing. That number fell actually to 53.9%, which is well below what the consensus estimate was, and really the lowest level since August of last year, 2016. So I know we've got to take a quick break. We'll touch quickly on the jobs report when we come back.
Right here on the Accunet Mortgage and Realty Show. And if you have a question or would like to text in a question, you can reach us on the Accunet Mortgage talk and text line. That number is 414-799-1620.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, it's the final day today at Tropicana Field for the Brewers and the Tampa Bay Rays. Jeff Levering and Lane Grindle hit the airwaves at 11:35 this morning to begin coverage right here on 620 WTMJ. Jerry Serkitich is in for Brian and David Wickert this morning, and we are focused in on the Accunet Mortgage and Realty Hour here on WTMJ.
All right, Steve, thanks. And where we left off here was just wrapping up last week's economic highlights and the jobs report. Very important each month. The first Friday of every month, the jobs report for the previous month is released. This past Friday, that release showed employment to get a little bit stronger. And so as a result, our rates and pricing, I should say, and we talk about mortgage rates versus mortgage pricing, Steve. I know Brian has talked about that too recently. And when we say mortgage rates rose or dropped, that's not always completely accurate because in some cases the market doesn't move enough to actually move the rate up or down even just an eighth of a point, but the pricing may improve or worsen, thus the costs either going down or going up to secure that same rate. So we didn't see a big move here, but mortgage pricing did worsen a bit. We saw a little bit more upward pressure as a result of that jobs report because the consensus estimate forecast was for 180,000 jobs to be created. The economy, actually added 209,000. So beating expectation, generally a good thing or good news for the economy. And as we always talk about, good news for the economy, generally bad news for rates, or at least it will put some upward pressure on rates. The unemployment rate actually declined from 4.4% to 4.3% as reported. And that matched May's reading at the lowest level of unemployment since 2001. So good news, for the economy, but the good news was it wasn't too good. So mortgage rates held fairly stable. Just saw that pricing worsen just a bit. Looking ahead next week, pretty light week, but we'll be watching for the Consumer Price Index, CPI. That comes out on Friday. That's another widely followed monthly inflation report. Looks at the price change for goods and services which are purchased by consumers. So that's another one of those indicators that could point to that mortgage pricing either improving or worsening. So let's get into, before our next break, Steve, this article by the CEO and president of the Mortgage Bankers Association, David Stevens. This, again, 4 financing steps that will open the door to home ownership. We'll get right into the first one. He talks about know your budget. When thinking about affordability, you got to remember your monthly house payment will include not only principal and interest, it's the primary components of that payment, but also insurance and taxes. So very early in the process, that's really important. And I'll tell you, something we do as a matter of course is our loan consultants have a conversation about this with home buyers and budgeting in terms of a monthly payment target very early on in the process, where you'd like to see that total monthly payment stay at or below. This allows us to make some calculations in order to back into what price range maybe that buyer needs to stay within to maintain a payment within that target range. And then, of course, we're also analyzing the complete picture of other current loan and credit card payments to verify that that monthly payment target that they have in mind still fits within an approvable range based on current mortgage underwriting guidelines. So, we always hope that those reconcile with each other and that somebody's not maybe looking well above what maybe current mortgage underwriting guidelines will allow. And if they are, then we try to help make those numbers work, find ways to pull levers to help them get where they want to be. Also, don't forget that in addition to down payment, there are other costs that can be significant. Not only costs to obtain the mortgage, like the appraisal, closing fee, costs like that, but You're also going to have a home inspection. There may be another expense for testing for radon, other things like that. So just knowing your budget, knowing what it takes to buy a home in terms of not only monthly payment, but those costs that are going to go into that. So that's a good place to start. That was his number one. We'll get into his second point here and second step when we come back from our next break.
Right here on the Accunet Mortgage and Realty Show. And again, if you have a question, you want to text or talk it into us, you can do so throughout the Midwest on the Accunet Mortgage talk and text line. That number is 414-799-1620.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, it's the final day today at Tropicana Field for the Brewers and the Tampa Bay Rays. Jeff Leberling and Lane Grindle will hit the airwaves at 11:35 this morning to begin coverage right here on 620 WTMJ. With us is Jerry Serkitich in this morning for Brian and David Wickert. We've been kind of running through a list here of ways to open the door to home ownership, according to David Stevens from the Mortgage Bankers Association.
Yes, we have, and we covered number one. We're on to step number two, as reported here by the Mortgage Bankers Association president, and this one is understanding the process. He talks about here that you should really do your homework, talk to others you know who may have recently purchased a home and about their experience, family, friends, coworkers. Try to gain some information, and a lot of times that may be as good or better a resource than an online search, which may be a good idea as well. But talking to others who you might know and getting that firsthand experience can really be a big help. You also want to talk to a lender then about the process and timeline, so you're prepared when it's time to make an offer on a home. And we'll talk about preparation and how important preliminary approval is. We'll touch on our rock solid pre-approval. That really goes right into that, understanding the process and being prepared. Number three, shop around. Get recommendations again, he says, from friends, family, other professionals. Explore, for example, different mortgage products offered, especially those for first-time home buyers. For those looking to get out and open that door to home ownership for the first time, there are products and programs like the Federal Housing Administration, FHA, and other loans that carry lower down payment requirements. In Wisconsin, we're lucky enough to have our state-run first-time homebuyer program, WIDA. By the way, you don't have to be a first-time homebuyer, although you cannot have owned a home within the last 3 years. So WIDA has made that change. It used to be that you could not have owned a home. Now you just can't have owned a home in the last 3 years. So that program allows for lower down payment requirements, lower costs, a lot of features with that program if you qualify for it. There are some income eligibility requirements and so forth that you do have to qualify for. However, conventionally, even home buyers buying if they are a first-time home buyer, again, not owned a home in the last 3 years, you can actually secure a conventional home loan with as little as 3% down without having to qualify for income eligibility and some of those other strings that might be attached for a program like WIDA. So lots of options. I mean, ultimately, choose a lender that's going to be responsive for you, reliable, helpful. At Accunet, of course, we love educating and guiding home buyers through the process, especially first-time home buyers. Really like taking the time to help educate and make sure they understand those next steps. His final step, the fourth step, is pitch in. Once you make an offer on a home, he says, you're working with a deadline, the closing date. You now have to keep that ball moving down that path, and so that's an important date, probably maybe the most important, but let's not forget about some other deadlines that need to be met prior to that closing date and why it's important that you help pitch in. So we're going to cover a few of those and talk again a little bit more about the rock-solid pre-approval and how important it is to make sure you do get prepared when you are thinking about buying a home. We'll do that when we come back from the news.
Accunet Mortgage and Realty Show on 620 WTMJ. We're coming up on 10:30 on this Sunday morning as we welcome in from the WTMJ Breaking News Center, Colleen Bolin.
Thank you, Steve. A West Dallas police officer.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
It's 10:34 on this Sunday morning. Jerry Serkatich in for Brian and David Wickert this morning. We're up to the rate roundup portion of the Accunet Mortgage and Realty Show.
We are indeed, Steve. So let's cover that, and then we will promptly come back to finishing off these 4 steps, and we are on step number 4. We'll get back to that and wrap that up. But first, let's help everybody and give them an idea on where interest rates ended up the week last week. First off, the Freddie Mac weekly surveyed rate, which is done by surveys done earlier in the week. The average 30-year fixed rate ended up at 3.93%, Steve, with a half a point in cost, an additional cost. So what that means is national average closing costs paid on a $200,000 loan would be around $1,000 to $1,100. Normal closing costs in Wisconsin about $1,100. But then you have on top of that, $1,000, which would represent a half a percentage point, a half a discount point on a $200,000 loan. So that means an average cost then of somewhere in the neighborhood of $2,100 to $2,200 to secure that rate of 3.93%. Last week's rate, 3.92. So you can see just how close it essentially didn't move at all. So when I mentioned earlier about mortgage rates worsening or improving, here's a perfect example where really it was more the pricing because the interest rate essentially didn't move. Now, where we ended up the week on Friday, we could offer, Steve, a 30-year fixed rate, 3.875 with an APR of 3.903. So you'll notice that was below that weekly surveyed rate of 3.93% that required a half a point. Not only could we help folks with a lower rate at 3.875, but we could do so with 0 points and total closing costs of $1,100. So interest rates, 30-year rates, all long-term fixed rates, very, very affordable yet. The 20-year quickly was at 3.625 with an APR of 3.662. The 15-year, 3.25 with an APR of 3.295. Both of those options, again, 0 points, total cost of about $1,100. And then just quickly run through some adjustable rate mortgage pricing. That has become a little bit more popular, although with long-term fixed rates staying as low as they have, that's still been the winner for the most part. The 10-year ARM, though, 0 points again, total cost of about $1,100 at a rate of 3.75, APR 3.86. The 7 year has been a little bit more popular. That could drive the rate down to 3.5% with an APR of 3.779 with, again, no points and total cost of about $1,100. So somebody thinking about the fact that they may not be in the house for much more than 5, 6, 7 years, you could secure a rate of 3.5% versus the 3.875 rate that you're locking in for that protection over 30 years. So something to keep in mind, something we talk to folks about as we consult what might be best execution for one based on their specific scenario. I guess I would also like to say keep in mind that we can always customize these loan terms. So somebody who might have only 26 years left on their loan, good news, we can help you with a 26-year loan, 27-year, 24 years. So we can customize that loan term anywhere between 10 and 30 years. A lot of people like that. So keep that in mind when considering the possibility of refinancing. All right. Let's before we get to our next break, let's wrap up the 4th step here, and that was pitching in, talking about the fact that once you make an offer and it's accepted, we're working on deadlines, and it's important to get the help of you, the home buyer, at that point. And we talked about the closing date, of course. That's a big one. But then don't forget about other deadlines within that offer. You're going to have a deadline for a home inspection to make sure that gets completed within a certain number of days of acceptance of that offer. You might have testing for radon, like I mentioned earlier. There's, in most cases, going to be a deadline to meet an appraisal contingency, a date whereby you have to have that appraisal completed. And then most important in many cases for folks is the finance contingency deadline, the date you must prove to the seller you've got a mortgage loan commitment, or in other words, a full and final loan approval. So those are real important deadlines, and that's why we need your help, the home buyer. I'm going to share a quote we had gotten from a home buyer we're helping right now who's relocating from Alabama here to Wisconsin. We're right in the process of helping him. He has been on top of things, very organized, and pitching in as best he can. And we had complimented him on that, and he had replied saying, it's smart to make it easy for someone to loan you money. It kind of makes sense, doesn't it, Steve? If you're asking for a loan, you're applying for a loan, it kind of makes sense that, you know what, if there's documentation we need, there's information needed, let's try to work together to get us that information so we can help you in securing the financing you're looking for. So it's that was an interesting response. And he's been great, and for the most part, the folks we work with are very good and understand the importance of working together. We're going to wrap up that topic by just touching on the rock solid pre-approval when we come back from this next break.
Right here on the Accunet Mortgage and Realty Show. And again, if you have a question or you want to text in a question or comment, you can do so on the Accunet Mortgage talk and text line. That number is 414-799-1620.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, this weekend marks 5 years since the tragedy that hit the Sikh temple in Oak Creek. Tonight, you can hear from those most closely impacted by that fateful day in 2012. Our own Steve Scafidi and Eric Bilstad host Oak Creek 5 years later. It all begins tonight at 8 o'clock right here on WTMJ. So the rock-solid pre-approval letter that you can get from Accunet, that can really be a solid piece of ammunition to help you win a deal.
No question about it, Stephen. We're talking about opening the door to home ownership. No better way to be prepared than to secure not only a preliminary approval, but our guaranteed, rock-solid, fully verified pre-approval. And so, we're just talking about pitching in, and there will be some documents that are required to verify one's income, their employment, the assets or money that they're going to use to cover the down payment and other costs involved with securing the loan. The fact of the matter is that once you find the right home and you apply for that loan, those documents are going to be necessary, and at that point, that's when most people are working to kind of scramble and pull together all of that paperwork and get it in so it can be reviewed and hopefully check out to a point where they secure that approval. Well, what we try to do is take the burden of that off at that point, because things get really, time gets compressed. We're working on deadlines, and that's not the time to really have that information analyzed for the first time. We like to, through the process of that rock-solid pre-approval, ask for and that help from that borrower, that home buyer in pitching in right up front, ask them to provide maybe a pay stub, a W-2, and bank statements of sorts to help us verify that information, to not only issue and provide them that rock-solid pre-approval, which gives them the peace of mind to go out there and find the right home and write an offer with confidence. It's also going to help make sure that we've analyzed that data to make sure that if there is something that could cause a bit of a speed bump or us to have to shift gears a little bit, we have the time with which to do that and get things in order before they actually find the right house and the clock starts ticking on those deadlines. So really important. And so the documentation up front, would not only serve to secure that fully verified pre-approval letter, but then it also, as you might suspect here, streamlines the process once you find the right home, because now we already have that information. And we've done the analysis. It really moves things along, and it's a much smoother process and more enjoyable, I might add, for a home buyer, especially when going through it for the first time. He finished off then just this fourth step by saying that much of the process leading to closing can be done online. The phone, actually online, over the phone, even on your smartphone. And this is also true with Accunet. We really work to do our best to help you avoid surprises, utilize the best of technology. Kind of makes me think, Steve, I was listening a little bit earlier. You had a segment about an article you had found on technology and smartphones and this group of kids, what was it, 1995 to 2010? What were they called again?
2000s, they're calling them the iGen ahead of the millennials, or after the millennial generation.
Right. Yeah, the iGen. Okay, so it is interesting because things do change. I recall back to, when I joined Brian almost 18 years ago now, when we were just getting started with Accunet, and how even then we started doing some advertising online and kind of changing the way we were doing things. We had always sat down across the desk from somebody and met with them, gathered the paperwork, and so it was a bit of a departure from what we were used to, and thought, boy, is this really going to work? Well, it sure has, and it's continued to evolve to a point where now, like we're talking about, one of the things you were highlighting there in that article is they're communicating, but there's no physical interaction. It just kind of made me think about how in many cases there's not as much physical interaction with obtaining a mortgage anymore either. We spend a lot of time with folks, but in many cases it's time spent either over the phone, online, via email, text messages, and other technology, which works great. It's become a much more convenient process for home buyers and folks looking to refinance. I just thought it was an interesting analogy as I heard you talking through that segment. And so yeah, that was the 4 steps of opening the door to home ownership. And what I do want to spend some time on in the time we have left between now and the end of the show is this article then, it kind of leads into this. It's busting the mortgage down payment myth. So talking about opening the door to home ownership, when can you buy? Is there some people out there maybe contemplating buying, thinking maybe they can't because they have this misconception about how much down payment is required. So we're going to talk about that, busting the mortgage down payment myth, when we come back.
Right here on the Accunet Mortgage and Realty Show.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Brian Wickert and David Wickert off this week. Jerry Serkatich is in here with us, and we've got Nick from Milwaukee who wants to throw a question out on the table. Good morning, Nick. Welcome.
Hey, good morning. So I bought my house in 2014, and I had not so good in credit rate, so I got PMI on my mortgage now. My question is, what's the best way to get that off there? Is there a good way to do that?
Well, absolutely. So first off, thanks for calling, Nick, and good to have a chance to talk with you here. We'll spend a couple of minutes, and then if you'd like, would be happy to talk with you off the air when we wrap up here. And Ben could grab your contact information when we finish up. But the mortgage insurance you refer to would have been a function of the fact that you had less than a 20% equity position when you bought the home. Is that correct?
Right. Well, I had a down payment assistance through the city of Milwaukee where they gave me a $15,000 forgivable loan.
Okay.
Or if I live in the house for 5 years, it's all said and done after that.
Okay. And how long? You said you bought in 2014. Okay, so it's been a few years at this point. And so that mortgage insurance, though, would have been a function of equity position. You mentioned your credit scores maybe were a little bit lower back at that point as well, which would have likely led to a higher mortgage insurance premium. So you do stand to gain here potentially, Nick, based on what the home might be valued at today and how much your credit scores may have come up. So even though you may not be able to get out from under the mortgage insurance completely, there's a good chance that we may be able to help you decrease the amount of the insurance premium required based, again, on a little bit more equity, higher credit scores. So in order to fully answer that question, we'll need to learn a little bit more information. But I think it's safe to say that it's definitely going to be worth a 10-minute consultation, which we can help you with over the phone and fairly quickly help you decide whether or not there's enough benefit there to potentially pursue. So hopefully that helped, Nick. And if you could provide that information to Ben, we'll be happy to give you a call and follow up with you.
Great call.
Yeah, that was, and look forward to talking with him to see. Like I said, Steve, mortgage insurance premiums are a function of your credit score. They're a function of the equity position, and then in some cases the loan program type, and then loan size. And so the couple of factors there, as your score comes up, the risk factors diminish, and that allows for a little bit lower premium, just as if you have 15% equity versus 5% equity, that too will influence that. So, all right, in the couple of minutes we have left, let's try to cover this busting the mortgage down payment myth.
Sure.
Talking about down payment and equity position and how that affects the need for mortgage insurance. So this was by again Lawrence Young, the chief economist for National Association of Realtors, and he writes that many even today still believe that a 20% down payment is required. The reality, of course, that's not the case. It really depends on a number of factors, though, in terms of just how much is required. But many options exist for home buyers to purchase a home or refinance a home, for that matter, with less than 20% down. And so in fact, he pointed out here a statistic that the median down payment level for all of 2016 was actually 10%. And oftentimes, down payments wound up even lower. For example, the down payment level for first-time buyers was at 6%, and he noted that it had been at 6%, that down payment level for first-time home buyers, for the last 3 years. So I thought this misconception that he highlighted was really revealing from this standpoint too. That he shared some additional statistics and percentages, and he mentioned that it's still remarkable that renters, those that are likely first-time home buyers, think that a large down payment is necessary. In fact, almost 10% of renters still do believe they needed 20% down. As many as 26% believe they needed to put 15 to 20% down, and another 22% thought they needed at least 10%. So the confusion about down payment requirements, combined with these higher rents and home prices, rising home prices, that is, and a limited supply of homes for sale, all of those factors may be keeping home buyers from entering the market still, even though this was interesting too. 9 in 10 indicate that owning a home is still something that they're shooting for, part of their American dream. So he finally states that while there are benefits to a larger down payment, of course, and we just touched on those as well, once you get to that 20% equity position, mortgage insurance is no longer required. However, there's numerous options available for smaller down payments, so don't think you have to wait or should wait even to buy until you're able to save that 20% down. And if you're wondering just what those options are, you check us out. We'd be happy to spend the time to uncover your options, share with you what might exist for you based on your scenario. Finally, he shared these 3 tips just as we wrap up. Review your income. If you're thinking about buying, talk with the lender about pre-approval. We talked about rock solid. Finally, just seek out the help of professionals that can help you with setting out to buy that home. And so I know our time is up here, Steve. It's been great to be with you again. I look forward to sitting in with you again next week.
You got it. Jerry Serkitich in for Brian and David Wickert this morning. Colleen Boland will join us next from the WTMJ Breaking News Center.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.